Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, so a wild day today. We're going to look at gold, the miners, the bear miners, everything here. So gold, big upper wick of profit taking, giving back all those gains on the day, and an initial run up for the bulls leading into the Yellen talk, and then with the dump, gold dumped as well. And when you have the market and gold and going in the same direction, that's when the miners really thrive or really fall apart. And today they fell apart after a really strong start. So this upper wick is rejecting from all kinds of resistances. Still held support, 1321, 1321.20, so that's establishing itself as a base. The bulls want to hold that level early next week. If we break it, we're heading back down to 1310. So that's a key level to hold. We have all these moving average resistances to be watching, the 50-day and the 10-day, but I'm going to be watching the previous price history more than those moving averages. The weekly is losing the 10-week moving average support for the first time in 3 months. And we are seeing a bearish MACD cross, and we're looking at the middle Bollinger Band, which is going to be in the low 1300s, along with the low of this last consolidation, that 1310 level. Bulls really want to hold that 1310. If we break it, we're seeing lower highs and then lower lows on the weekly time frame. So gold on the hourly chart had a very strong break, but look at this hourly candlestick by the time it closed. Perfect in this downtrend line, and then the next candlestick back tested and rejected from it, and then absolutely dumped. So that was your heads up right there that the bulls were tiring and maybe not able to make any momentum, and we're seeing just lower highs continue to be placed here on the hourly time frame. So we're zooming in at today's action. Whenever I see candlesticks like this, it's really hard to determine what the heck is going on, so you need to zoom in to get a better picture. So looking at the 15-minute chart, it's a lot more clear. You see the big dump on Yellen speaking, the big bullish move, clear bearish reversal, gravestone doji, confirmed, and then we had a dump, hit a new low of the day, but the bulls bought that dip, lower high, maintaining the base, lower high, maintaining the base. So establishing that base at 1320 is very key heading into next week. If we lose it, we're going to see another leg to the downside, and we can use this as a stop loss level, especially for some of these minor plays where if we get in bullish positions, we'll put our stop loss to trigger if 1320 support on gold will be lost. And the bulls need to see a break of 1327.35, 1331.10, all kinds of resistance levels to be watching on these shorter term time frames. So let's check out the minor bulls, and then we'll check out the minor bears. So JNUG back testing and holding the 100-day moving average support. We are not confirming the bullish reversal candlestick from yesterday. We are rejecting from the lower Bollinger Band daily resistance, just like we did yesterday. And we are going to be looking to establish support either at the low of yesterday, 1827, the low of today, 1958. Bulls need to hold those levels to see a turnaround, and they need to see bullish reversal candlesticks confirmed. So that did not happen on JNUG. NUGT looks even worse. Back testing and rejecting from the 100-day moving average resistance and the lower Bollinger Band. So NUGT has those two levels as resistance, whereas JNUG has the 100-day as support, rallying around that level, and only the lower Bollinger Band as resistance. So that's a pretty big difference between those two names. And now let's look at the bears. JDST, perfect bounce off the 10-day moving average support. Upper Bollinger Band 2827 is acting as resistance and keeping the price down. So we have a channel between the 10-day and the upper Bollinger Band to be watching. And as long as the bulls hold that channel, they will be in a strong uptrend. A loss of the 10-day moving average support would be a red flag, but still looking pretty healthy, especially with all that volume showing bulls buying today. Dust, even more bullish. So I highlight this in the videos, and I know some of you guys are rolling your eyes from hearing it 10 times, but if you're playing miners bearish, you're playing dust. If you're playing miners bullish, you're playing JNUG. So looking at dust here, we are holding the back test of the 50-day moving average support. That's establishing a base. We are trading above the upper Bollinger Band. We're still in breakout mode on dust. We closed above it, back tested it and held. Today we back tested it and it held again. And the difference again between these two, JDST is rejecting from the 50-day resistance and DUST is bouncing off of its support. And that's because, like I just showed you on the 100-day moving average, JNUG has that support, and NUGT is rejecting from it. So big differences between these names. We're looking up at resistance of 3670 and 3744 on Dust, and we'll see if the bulls can continue to the upside. This candlestick and this daily chart tells me that the bulls do still have a lot of strength here in Dust, which means NUGT could be seeing further weakness, and that 1320 level on gold is going to be very telling. If we lose that level on Monday, DUST, Dust, is going to see a nice continuation move to the upside. So as long as the upper Bollinger Band is support on Dust, the bulls are in full control. And it's all about 1320 on gold, the commodity. We'll see if this tightening pattern breaks to the upside or breaks to the downside for further continuation. And again, after 1320, we're looking at a $10 drop to 1310. I appreciate you watching. I hope you have a great weekend. See you later.